Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. Last one of the week. It is Thursday, the 16th of March. Today we are going to jump over to the industrial sector and look at Huntington Ingalls Industries. They are a shipbuilder. Let's jump right into the video. The legend continues. If you want to know more about them, check them out. HII.com. That is their homepage where I pulled this information from. On March 31st, 2011, Huntington Ingalls Industries, ticker HII, formed as an independently publicly traded company when two legacy shipyards joined forces to become the nation's largest shipbuilder. Since then, HII's portfolio expanded further with the establishment of a third division that delivers all domain technology solutions to civil, commercial, and defense customers, both domestically and internationally. Today, HII is a global all-domain defense provider with a more than $45 billion shipbuilding backlog and more than 43,000 employees. You can read through the rest of this. Go ahead and pause it. Like I said, if you want to check out more about them, HII.com is their homepage. Basically, they are a shipbuilder for the military-industrial complex, right? And I don't think that that's going anywhere anytime soon, so probably going to be here for a while. We are talking about Huntington Ingalls Industries, ticker HII, out of the industrial sector, and down today, 0.08%. Not a ton down, but they were down, and this is one I've had on the list to cover. Closed out the day at $205.26. 52-week range as low as $191.49, as high as $260.02. So they are closer to their 52-week low, but they are a little off their 52-week low as well. Average volume 381,000. Today was 269. Looks like they actually had a good morning, but around noon they started the sell-off here. Market cap of 8.181 billion, a beta of 0.64, so they are less volatile than the overall market. PE ratio is decent, 14.41. Obviously, if we could get them closer to this 52-week low, it would be a lower price to earnings ratio here. And earnings per share EPS $14.24. Earnings date, the next one is coming up May 3rd to May 8th. For dividend is $4.96. That's on the year. They do pay out quarterly. We will see that quarterly payout here in a moment. Decent dividend yield, 2.38%. And the last ex-dividend date was February 23rd, 2023. So I believe they would have an ex-dividend date coming up. We'll see that here in a minute also. And according to Yahoo Finance, where I pulled this information, I am not affiliated, just one of the sources that I like to go to. They have an estimate of $250.40 for their one-year high, right? One-year target estimate. Now I'm going to continue to pull up some of the information that I look at. All right. So again, if you went into statistics, went to Yahoo, typed in HII, and then clicked on statistics, you would see a whole bunch of information. One of the things I like to look at there, at the very top, you'll see price to book, which is a good one. You'll see price to earnings. You'll see all the other typical technicals you see on this page here. But this one here is one I like to look at. Their 5-year dividend yield, their 5-year average dividend yield, right? So again, based on dividend yield theory, if the 5-year average is lower than their current average, right? It's currently 2.38%. That's their current dividend average right there. 2.38%. That's what the forward dividend yield is telling you, what it is currently, what it looks like going forward. So their dividend yield currently is higher than their 5-year average. That speaks to some potential that the stock is undervalued. That speaks to undervaluation of the stock, right? If it was the opposite and the 5-year average was lower, so if this 5-year average is of 1.93, if the current yield was 1.6, 1.2, then it would be overvalued. So you're looking for a higher current dividend yield than the 5-year average. If it's higher, you can do the math and see how much it's underpriced or overpriced based on that percentage. You can do that math, but it speaks to undervaluation. So 5-year average, higher than 5-year average, undervalued. 5-year average, lower than 5-year average, overvalued. That's just a quick reference. That doesn't necessarily mean it's actually the case. There are other considerations to look at. That is just a quick reference to say, okay, do I want to look at this stock any further? That's one I use. The other one I like to look at when I'm looking at a company, sorry, I'm petting my dog here. She's bugging me. Whenever I'm looking at a stock to see if it is worth researching, I look at the financials and go into cash flow, and I'm looking for their free cash flow, and I want growing over time. So 366 million, 740 million, big jump here. then down a little bit, 429, and then back to 482. So if you looked at this, you could say 366, 429, 482. That's probably the average growth. For whatever reason, they had a big, maybe they got a contract with the government or something here, a big jump one year. But overall, it looks like they're growing, by about 50 million a year, right? Somewhere in there, right? So growing free cash flow. That's what we're looking for. The other thing I like to look at, and they're right by each other, that's why I snipped them both, is the repurchase of capital stock. You don't want necessarily a company that is diluting you as a shareholder, which means they're dumping more shares into the market. You want them buying back shares, which is what they're doing. They're taking shares away each year. So that's another thing that I like to look at. Now, I always recommend more than one source. So another one I like is stockanalysis.com. Again, you can look at their statistics, their financials. It gives you a lot of the same information, just in a different format that Yahoo Finance does. I'm not affiliated with stockanalysis.com either. But according to the 17 stock analysts, they've had to take a look at it. They call it consensus buy, though it is right on the edge of a hold and buy right here. This would be a sell. This would be a strong sell. This would be a strong buy, right? If you actually go into the site here, you can click on each one, and you'd be able to see how many of those 17 stock analysts call it a buy, how many call it a hold, how many might call it a sell, how many might call it a strong buy, right, or a strong sell. But according to their estimate, they have a low estimate of $180.79, which would be 11.92% decrease in the price. So they see maybe some further downside here, which obviously if you could get it cheaper, that's the better way to do it. They have an average estimate of $255.41, which would be a 24.43% increase in the stock price. And if it happened to hit their high of $315, that would be a 53.46% increase in the stock price. Now, another one that I like to look at, if you go into their statistics, a lot of other information, but one I like to look at is financial efficiency, right? So I want to look at specifically their return on equity and their return on invested capital. ROE, return on equity, return on invested capital, ROIC, right? So I like anything above 10%. Depending on the company, I might even go lower than that. If you want to really look at this compared to its industrial average. So CVS, for example, you'd compare to like Rite Aid and Walgreens. Kroger, you might compare to Target or another company like that, Walmart, those companies. So you want to compare similar companies and see what their average is across the sectors, right? But for the most part, anything above 10% is good for return on invested capital. And same thing, anything above 10%, in my opinion, is good. And both these are just my opinions, is good for return on equity, right? So they have an 18.8% return on equity and 11.4% return on invested capital. I like both of those numbers. Lastly, like we said, it was a quarterly pair. This is where I would typically show you if I have a position, how many shares I have. I do not have a position in Huntington Ingalls. I did at one time. It ran way up. I was buying it much lower than it is now. I think down in the 130, 140 range. It ran up, obviously, with the Ukraine war, and I took the opportunity to sell it here maybe a year ago. So it was one of the ones I sold whenever they ran up. Lockheed Martin was another one, same thing. I will wait for a big pullback on all of those because they are up, in my opinion, right now. Quarterly dividend payer, they do pay out $1.24 per share. Low payout ratio, 33.1% payout ratio, so they have a lot of runway. The only thing I really don't like, it's slow grower, 4.31%. Usually I want something, if it's slower growing like this, I want a 3-4% dividend yield to start. This one being 2.34 is a little on the low side, but a lot of room to increase that payout, and it is growing, so not too bad. And really, that is what I would look at whenever I look at a company. Obviously, I do a little bit more, look at their revenue, look at their debt. You want to get in there and do as much research as you possibly can, read more about the company, understand what products they sell, that sort of thing, which is why I give you the homepage link at the very beginning. So if you are interested in these companies, make sure you're doing your own research. I would be interested in Huntington Ingalls probably under 190. That would be where I would look at them. I think they are maybe a little overpriced right now and probably getting a little bit of bump from the Ukraine war. But I also see growing free cash flow, nice return on invested capital, nice return on equity. According to the 5-year dividend yield theory, they are undervalued a little bit here, 1.95% versus 2.38. So call it, what is that, 20-30% undervalued maybe. But that is not, again, the be all end all. There are other metrics out there that you can look at. But what do you think about Huntington Ingalls? As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button down below. Help me out. Drop a comment as well. It does help out with the YouTube algorithms. Help myself, this small YouTube channel, grow. Right? I am trying to get out of the rat race, so to speak. I would love to do this full time, but it all depends on how much you all like the videos. Hit that thumbs up. Ring the notification bell, drop comments, share with anyone you think that might find value in the content. I do personally read and respond to the comments on the day that I post videos for the most part. If I don't get to your comment, it's not because I'm ignoring you. Like I said, I do have a day job. I've got a wife and 2 kids. So I am busy. I do these after work as a hobby right now. I don't get paid from YouTube. But like I said, hitting all the notifications down below does help me out, so do that for me. I also have a Webull link down below. If you do not have a brokerage account, go ahead and sign up for Webull. Drop some money in the account. You'll get some free stocks. I'll get some free stocks if you use that link. It is also a way to help out the channel. With that said, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great weekend. And see you on Sunday for the portfolio update. I did make some buys yesterday, so go ahead and tune in and see what I added to my position, and any stocks that paid out dividends this week. I'll cover that as well, and we'll see you on Sunday morning. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.